The biggest event in crypto's history is a little over a month away, and you're going to want to hear all about the details and why it's so important. Hey everyone, Ian King here with your weekly market insights video. I'm going to share with you exactly what's happening in a moment. But first, before I get into it, if you like our content, please go ahead and smash that like button below. It helps us get our message out to other YouTube viewers. Also, feel free to leave a comment below. We'd love to hear from you. And lastly, if you haven't subscribed to our channel yet, why haven't you subscribed? Hit that subscribe button. You can also hit the little bell after that to be notified when we post a new video. And let's get into what we're talking about today. The biggest event in crypto's history is coming in a little over a month. And essentially what's happening is that Ethereum is moving from proof of work to proof of stake. I'll explain more in a moment why this is important, but let me just explain why Ethereum is, I believe, is the most valuable cryptocurrency in the world. I think it's going to be bigger than Bitcoin at some point this decade. I think it could be 20 times bigger than Bitcoin at some point in the future. And the reason why is very simple. It is that Bitcoin has limited use cases. It was created 12 years ago. It was the world's first cryptocurrency. Satoshi Nakamoto, we know all this stuff, limited amount, 21 million coins. It's great. Bitcoin is a currency that is not tied to a government, so it's not fiat. It's the first, digital hard money essentially. But it's very limited. You can use Bitcoin to buy things with. That's about it. You can store it like gold. You can hold on to it and hope that it appreciates against other real world assets. But Bitcoin's use cases are limited. And it was created in 2010. Now, 5 years later, Ethereum just burst onto the scene. And it took all of Bitcoin's properties, this idea of a decentralized currency that's not backed by a government, this idea that it has a limited amount of supply so it can be considered hard money. Ethereum took all these use cases and it did one simple thing to it. It added a programming language on top of the cryptocurrency so that you can use Ethereum to build new types of decentralized applications that don't need some type of middleman to handle transactions. And when you think about the potential use cases for Ethereum, it just keeps building. Anything from decentralized cloud storage to network bandwidth to all types of decentralized financial applications where you can lend and borrow, and new forms of capital formation like NFTs, where you can have a digital asset that is unique and can be traced to some point on a blockchain to prove its ownership. I mean, the use cases with Ethereum are just exponentially greater than what you can do with Bitcoin. And that's why I believe it's going to be a much more valuable cryptocurrency than Bitcoin over time. Now, why is September so important? And this is very important to understand. In September, the Ethereum network is going through an upgrade, and it is going to be the biggest event in crypto history since the beginning of Bitcoin. What's going to happen is that the protocol and the consensus mechanism, which is how you verify and validate transactions. And the consensus mechanism is the heart of every cryptocurrency. It is the way that two people who have no economic history and don't know each other can engage in some type of form of commerce, digital commerce, and transaction online without the need for a middleman. It all happens because of the heart of every cryptocurrency, and that's called the consensus mechanism, which basically approves and validates new transactions and puts them on a blockchain. So the consensus mechanism that Ethereum has currently is called proof of work. And it's the same type of consensus mechanism used by Bitcoin to validate new transactions. And it requires very heavy, intensive amount of computational power. I mean, the Bitcoin network alone uses millions of computers all around the world and uses as much energy as the entire country of Norway in 1 year by some estimates. But there's a new type of consensus mechanism that was created by Ethereum founder Vitalik Buterin, and it's called proof of stake. And what it requires, instead of having all these computers around the world that are validating and appending transactions to the blockchain, it allows you to stake your tokens in the form of to validate new transactions. And basically the way it works is you stake your tokens in the network, and with Ethereum, you have to have a minimum of 32. And then the algorithm will randomly choose a number of validators, number of stakers. And as long as those stakers, 51% of those stakers agree with all the transactions that happened in the last block, then that block will be validated and added to the network. And it's a very novel form of consensus mechanism that is going to get rid of the computational power, get rid of the amount of energy we use. It's going to suck up Ethereum supply because people who hold Ethereum and stake it to the network are going to get something like 10 to 15% rewards annually in the form of fees that people using the network will pay. And it's going to decrease the amount of new Ethereum issued every day because Ethereum is issuing new tokens to pay these miners who are using computational power. And so this is why it's just a massive event that's happening in September. And recently, Vitalik Buterin, the founder of Ethereum, said that the merge, which is what this event is called, the merge, is not priced into Ethereum. And so let's take a look at some charts. I want to just share with you a couple charts. The first is Ethereum, and you'll be able to see exactly how much we've rallied just since what happened this summer with all those crypto liquidations. You can see Ethereum went from about 1,000 to over 1,600 recently. So that's a 60% return in just the last couple of weeks. So we're starting to see this merge get priced in as this is rallying. But I think what's more important here is this concept that because Ethereum has so much more utility than Bitcoin, you will see it be more valuable than Bitcoin over time, because you need Ethereum to create all these new types of decentralized applications that are necessary for Web3. And I'm talking about, decentralized network bandwidth, decentralized cloud storage, NFTs, decentralized finance. All of this stuff is built on Ethereum, not Bitcoin. And if you look at the chart, this is a ratio of Ethereum to Bitcoin. And this is, each one of these little candles here is 1 week of trading. And this goes back to 2019. Okay, so during the bear market we had in 2019, the value of Ethereum decreased versus the value of Bitcoin. And then in early 2020, it started to move up. Okay, so it was priced at Ethereum was priced at 0.018 per Bitcoin. And we've seen a steady rally, especially during the crypto bull market that peaked in December of 2021. And since then, we've seen a downtrend. But now we're starting to see the value of Ethereum versus Bitcoin increase again because we're starting to price in the merge. And I also believe that we are starting to get into crypto's next bull market. Every time Ethereum rallies versus Bitcoin, it means there is more risk coming into the space. Investors are more willing to buy altcoins. They're getting rid of the, quote unquote, safe assets like Bitcoin and buying riskier assets. And this is really the start, the price of the merge. And I believe that we will see the 0.08 ratio of Ethereum and Bitcoin taken out in the next couple of months, which means that Ethereum is greatly going to outperform Bitcoin in the next couple of months as the merge starts to get priced in. So this is really exciting times for cryptocurrencies. I would love to hear what you think about that. If you own Ethereum, if you own other layer ones, feel free to hit us up in the comments. Any questions you have, we will address on further webinars. I'm Ian King. Thanks for tuning in this week, and I'll talk to you next week on that Market Insights webinar. Take care.